Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show, and today I thought I'd talk about lame excuses that people give for avoiding paying taxes. And I always find these things funny. And there was an article that was written by Tina Oram that was reprinted by permission of NerdWallet. Looks like it was posted on April 12th of this year. And there are some really funny ideas that people have about why they shouldn't pay taxes. And every year, the IRS takes a look at these and they put together their list of, tax scams and tax shelters. But this is something I thought was really funny. And, she highlighted several of those here, and I thought we'd spend a few minutes today and talk about them. The first one, and I hear this one a lot, sometimes if you're watching some of the late night TV shows, you'll see some people coming on and saying, paying taxes is voluntary. The general claim here is that some IRS publications and well-known court cases use the phrase voluntary compliance. So what they're basically saying is that, it's a voluntary compliance structure. So the problem is this doesn't work because the word voluntary simply means you can calculate your taxes owed and fill out your return on your own rather than the government doing it for you. So unless you're one of these people who doesn't file returns routinely, the IRS isn't going to send you a bill and say, hey, this is what you owe. So that's why they call it a volunteer system. Now, as one of the people in this article puts, says, this is David Duval, an enrolled agent, chief customer advocacy officer, tax audit. It's an audit defense firm in California. He says if it's voluntary, none of us would volunteer to pay taxes. We keep all the money for ourselves. But, as he notes here, the tax code is very clear that this system is voluntary from the standpoint of, you're voluntarily required to do it. But it's certainly not voluntary from the fact that you don't have to pay. You can't volunteer to pay. Some of us will pay more and some of us will pay less. It doesn't the way it works. So number two is wages and other income aren't really taxable. And this one's fascinating. So the general claim here is there's no taxable gain when a person exchanges labor for money. Money is just a reimbursement for time. So basically what they're saying here is that, if you're exchanging your labor for money, that's just a reimbursement. And by its very nature, reimbursements aren't taxable. Well, this is why it doesn't work. And that's because gross income means all income from all sources. And this is straight from the IRS code. And that includes compensation for services. It's all taxable unless the IRS specifically exempts or excludes it. So unless the IRS says that is not income, then it is considered income. Some people will try to file a tax return showing a zero income or tax liability called zero returns. Now, this is a little game that people play so that they can technically say they've complied with the requirement to file a tax return. So basically what they would do is they'd fill out a tax return and say, I have zero income because I have only exchanged labor for money, which I consider a reimbursement. Now, I think we've already discussed why this is frivolous. And that's because the IRS basically says that gross income means income from all sources. And unless the IRS specifically says it's not income, then it is. The next one here, number 3, and this one is hilarious to me. Technically, no one is a U.S. citizen. And that their general claim here is that people are actually citizens of particular states. And so they're not subject to federal taxes. So, I live in Delaware, so I guess I'm a Delawarean and not an American. Well, this doesn't work, and this is a very simple reason it doesn't work, and it has to do with the 14th Amendment of the U.S. Constitution. The 14th Amendment of the U.S. Constitution says that people born or naturalized in the U.S. are citizens of the U.S. and of the states where they live. So I am not only a Delawarean, but I'm an American. So the idea that technically I'm not a U.S. citizen, therefore I'm not bound by the IRS code is clearly frivolous, by its very nature. So obviously this is a silly idea. Just read the Constitution, look at the 14th Amendment, you'll see that it doesn't make sense. Another one here, number 4, it states that the IRS is actually responsible for doing everyone's taxes. And we'll spend a few minutes talking about this one because I find this one to be a little bit of truth and a little bit of fallacy. The general claim here, it's the IRS's job to prepare tax returns for people. If it fails to do so, the taxpayer then owes no tax. Well, that's a great idea, but it doesn't work. And that's why, although the IRS does sometimes file returns for people, it typically does so because a person hasn't filed for a long time. And when that happens, it's usually not a good thing. So let's talk for a couple minutes about that, because I do see some of the people who, and not only because they're looking for ways to get out of tax, but they may just not do their taxes. So I thought I'd spend a couple minutes talking about this. And what basically happens in this case is when you work for someone, or let's say you have a bank account or a checking account or an account, with a retirement plan, whenever you trigger anything that would be considered taxable income, the company that's paying you that income needs to report that to the IRS. So let's say, for example, that you didn't file your 2017 tax return. Now, I don't expect you're going to get a letter from the IRS on April 18th, the day after the tax filing deadline. And you might not get a letter after the first year, maybe even 2 years. But eventually what's going to happen is the IRS is going to compare their main records and say, look at this, Ralph here, he earned money, working at, Kmart back in 2017, but we never got a tax return from him. So what's going to happen is they're going to send you a letter and they're going to say, hey, wait a second. We noticed in 2017, Ralph, you didn't file a tax return, but we show here that Kmart reported that you made $35,000. So you need to report income. Now, a lot of times people will just ignore that and say, you know what, that's fine. It's voluntary. Like we talked about here, it's a voluntary system. Paying taxes is voluntary. And I didn't really earn income. I just had wages. And that's because I went to Kmart every day in exchange for my labor. They just reimbursed me for my time. And after all, I'm not a U.S. citizen anyway. I'm a citizen of Delaware. More specifically, maybe Newark, Delaware. So I'm a Newarkian or whatever you'd call that. But it's not the IRS's responsibility to do your taxes for you. So let's just say in this case, though, you just put it off and put it off. Well, eventually what's going to happen is the IRS is going to go figure out a tax return for you. And they're going to send you an assessment notice. And they're going to say, okay, Ralph, here's the deal. You made $35,000 working at Kmart. Now, we have no idea what else you've got going on in your life because that's the only income we see. But of course, we also don't know that you have children. We also don't know that you're married. So we're just going to do your taxes and we're going to assume that, you had $35,000 in income from Kmart. We're going to take the standard deduction. I would say personal exemptions, but they're gone for 2018. So we're going to take the standard deduction and whammo, here's your tax. And they're going to send you this assessment and say, you have 90 days to pay this. And that's because it's not their responsibility to do it. So, if you don't do your tax return and the IRS gets around to doing it for you, it is not going to be a pleasant experience. I have seen this happen to many clients who haven't filed, year after year after year. And then all of a sudden they get these assessment notices that say, well, here's what you owe. And then all of a sudden they come to me and they say, Ralph, what are we going to do about this? I'm saying, what have you been waiting for? And the craziest part, in many cases, these are the people who had, adequate withholding. They may have had deductions for mortgage interest or property taxes. They just didn't file. And, come to find out the IRS actually owes them money. But if you don't file, then once you go past 3 years, you can't even ask for that money back. So, don't buy into these things about where, the lame excuses why people avoid paying taxes, because it just doesn't pay in the end and the IRS will figure it out.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.